All right. Welcome, everyone. My name is Unity Stoakes, co-founder of Startup Health. I'm so excited today because we're joined by Vishal Vasishth, who is the co-founder and managing director of really one of the top investment firms around today, Obvious Ventures. Today, we're going to learn more about Obvious and their unique and really inspiring investment thesis. And we'll dig into all those details. Vishal leads Obvious's full stack healthcare and bio, as well as other things. He's the co-founder and managing director. He's led investments also in a few startup health companies that we share in common. Verda, who they were the first investor in, and Devoted Health, two extraordinary companies, and two of our family members in the startup health ecosystem. Before co-founding Obvious, Vishal was the founding partner of Indian-based fund Song Investment Advisors, and he also served as a really seminal foundational company. He was the senior executive at Steve Case's Revolution. We were chatting about that earlier. It's just really kind of a blast from the past, but really a meaningful company that helped set off, I think, a lot of the innovation we're seeing today in health. Prior to his career as an investor, one thing I love is Vishal spent a decade as an operator. He was at Patagonia, one of the world's great brands, in roles ranging from product manager to chief strategy officer. So as always, we're going to have a wide-ranging conversation today, but we want this to be interactive. So this is your opportunity to ask questions, to make this interactive. We're here to learn. We're here to engage. So please post your questions in the chat throughout, and we'll organize those, and then we'll call on you. And we'd love it if you introduce yourself and then ask your question. We'll have a conversation about that. But without further ado, welcome, Vishal, and thanks for being with us today. How are you?
No, doing really great. Thanks again, Unity, for inviting me. You yourself have been doing amazing work of building a great digital health community. So I'm excited to be here, part of this session.
I was remembering we've actually been on stage together over the years several times, which I've always enjoyed. So looking forward to today. But why don't we start getting to know you, a little bit about your background, and then it'd be great if you could share a minute on you, and then really lead that into your overview of Obvious. I think you have just a really meaningful and unique thesis at Obvious in terms of how you frame health across three categories. There's human health, there's planetary health, and there's economic health. And I think they really all impact our health and healthcare system. But let's start with you. Tell us a bit about yourself.
Yeah, so Unity, the cornerstone of my career was helping build Patagonia, the outdoor lifestyle brand. I was there for 10 plus years, and the company just left a huge impression on me on how do you build and run as an operator around an authentic mission, and also around helping build great culture. After 10 odd years at Patagonia, and with that knowledge, with few friends, I dabbled on building a nonprofit. I was thinking a lot about systemic change, and with few friends, we built a nonprofit called B Corp, and which has become a very large foundation now over the years. At the same time, I also became a fellow at the Aspen Institute. And there I was thinking about the role of business in society and how can business transform and use the power of capitalism to transform society in positive ways. And thanks to some friends, I got an opportunity to kind of move from the operator side to the investor side. First in the US, working for Steve Case at a fund called Revolution, which you mentioned, and then later on in India, and investing in emerging markets, more in the lower middle class market in that part of the world. Very, very different market. And then 11 odd years ago, I moved back to the US And I remember sitting in a small conference room with my two co-founders, Ev Williams and James Joaquin, and we were thinking a lot about why there's no purpose-built fund targeted towards solving humanity's biggest challenges and investing in things which matter. And I remember kind of distinctly Ev in his Silicon Valley style said like, "Hey, if it doesn't exist, then we need to build it." And here we are after 11 odd years. We've been on this journey of building obvious ventures on investing in things which should exist in the world, which builds a better world, a better society.
And that's a great lead into, I guess, your thesis, your world positive thesis, and building things with purpose. Obviously, Ev has built so many extraordinary things. I remember I was probably one of the very first people on both Blogger and Twitter, just both changed my life. But to bring everything that the three of you were thinking at that time, take us to where we are today with kind of your world positive thesis. What is your thesis at Obvious, and where do you invest across the landscape? We have companies at all stages, a lot of early stage companies, but that could be some pre-seed and seed, but there's also A and B. And so I'd love to learn a little bit about your world positive thesis. And you, for everybody on the session here, there's an extraordinary report that they make available on Obvious Ventures website that's free to download. I highly recommend that. But let's start there, and also at what stage you also invest.
Yeah. So we are focused on this belief that the most valuable companies of our times would be companies solving humanity's biggest challenges. And and for us, it's the we get excited about all these humans, entrepreneurs, their ingenuity, their creativity, their purpose to kind of look at complex systems, take those complex systems apart and kind of reimagine those complex systems, kind of build a better world. Like that's what we get excited at Obvious. And the manifestation of that human power is in three kind of areas which we focus on, which are kind of, I think, fundamental building blocks of our world: planet health, human health, and economic health. And in each of these three areas, we are thinking about what are the different solutions which are inflecting to the biggest problems. So in planet health, for example, it could be a transformation from combustion engine to electrification and autonomy. In planet health, it could also be going from dirty to clean energy and abundance of energy. In human health, it could be a move towards an episodic care to outcome driven care. It could be episodic care to be to a more deterministic care, to kind of decoding biology so that you can kind of understand disease better and solve diseases faster. And in economic health, it is about SMB empowerment. It's about kind of taking the best of tools which exist in large companies, providing it to kind of smaller companies so that they can thrive. It's about bringing manufacturing closer to home through automation and robotics. It's about safety and security. So things which matter is what we get excited about investing. And around this thesis, kind of these three areas, which we're always studying what are the solutions which are infecting, and entrepreneurs who are on this call, they are the ones who are pushing the boundaries. We are just observing, and then we make investments in those areas. And since 11 years, we've kind of raised four funds. We're just finishing raising our fifth fund. We are a classic seed and A stage investors. We do sometimes B investing as well, but mostly Series A and seed. And we can write anywhere from 1 to $20 million checks in companies. So hopefully that gives you an idea,
Yeah,
in the community, an idea of what we do.
that's perfect. And one of the things I find interesting is, and correct me if I'm wrong, but you have a very integrated approach across those three themes. And I think it's maybe touch on that a little. It seems very integrated, at least from the outside, versus very verticalized or siloed. Am I reading that right?
Yeah. So I think if you think about, we need to have it like at the highest level, first principle point of view, I think we need to have a planet which is thriving. So that means like, you have resources, and there is abundance, so that like I think we can build stuff on it, and can have a happier and healthier lives, and so that's going to if there is a dead planet, there's no business to be done. So I think like say how do we solve that. And number two, I think if we are not vibrant, if we're not healthy, and if our health system is not around prevention or cure or longevity, and it's more reactive, then I think like something is wrong. We're not investing right. So that's where we are focused on. And then we need to have purposeful lives, and like every day engaged in things which brings happiness to us and our families and our communities and stuff. So I think we think about it. We've designed this thesis as an integrated thesis of like, hey, what is most important to invest around? And thanks to amazing entrepreneurs, now there's a huge amount of validation of that thesis, because we have a company building diamonds in a plasma reactor as a way to get rid of mining, and mining is very destructive. We have a company reversing type 2 diabetes, as you know, where we are common investors. We have an investment in a company which is using AI and machines as a way to kind of come up with new drug targets, and decoding biology better. We have an investment in a company using kind of robotics as a way to automate warehouses and manufacturing settings through robotics and automation, and so that people are not doing dull, dangerous, and dirty jobs. So it's an integrated system, so that we can move the world forward in the right direction. Like that's what gets us excited here at Obvious. And
And
venture is and Unity, venture is the only asset class where we are able to kind of think about what the future should look like, and we start invest, and then we can kind of start investing around that. There's no other asset class, where you can do that.
and yeah, it's so exciting. We get to, in a way, create the future together, and that's just so fun. Uh, Taking us to the past, though, what did you learn at like Patagonia and some of these iconic brands and experiences, Revolution, that were kind of essential, kind of foundational pillars that you then brought forward? Obviously, I think this whole construct around purpose and meaning is essential. I just love to hear some of the themes and learnings that you brought forward from those experiences.
Yeah, I think as I was kind of thinking about this particular session, I was just, journaling in my mind, my professional journey. And one thing, thanks to Patagonia, actually, is this pursuit of an authentic purpose. I think is what I've carried all across whatever I've done. And then second is this optimism and and belief that there is something better out there than today, and working towards that. And and then it's all about, I know that we are living through this world of AI these days, but it's all about humans and people, and kind of and their creativity and energy to kind of build something which we all can thrive. So I think like those are kind of some of the value sets which gets me excited every day when I wake up.
You mentioned we're starting to get some questions, but before we get to those, everyone, please post your questions in the chat and we'll call on you. You have this construct that I think is really essential now that I read about in your World Positive report called generative science. We've, of course, all talking about generative AI, and you mentioned AI. Walk us through that link there, because I think it's really relevant to a lot of us innovating in healthcare specifically.
Yeah, so Unity, I think we're going through a transformation. like I think as investors, as entrepreneurs, like this is like such an amazing time to be alive. We have seen desktop create Microsoft. We saw when desktops got connected, it created search, and Google came out. When desktops got miniaturized into a mobile phone, you had Apple and Meta, and then when you had cloud and mobile phone, it created companies like Uber. And we are headed towards this new era of intelligent democratization, or like that's where we are today, as all this data, human data, has been gathered. And then in this intelligence democratization, of course, like we have seen, uh, you know kids writing an essay and what the next word is, which is kind of interesting by itself. But I think what we get excited about is this whole concept of generative science, where if first of all, science is very deterministic. Like there's, something is right or wrong is very clear and it's kind of established. And so if you are able to kind of predict much better than human brain can about what are the solutions to kind of complex problems through these kind of systems which are physics based or chemistry based or biology based, that could kind of really solve the unsolvable. And so that gets us excited as a thesis area, and we've been very focused on, in fact, like a lot of our investments in last couple of years have been with that mindset.
Yeah, and I know obviously Recursion, they acquired one of our companies, or one of the pharma companies that I think is really leaning into this concept in a way that, in a very novel way. Where do you see that we are? Like, do you see things just speeding up and kind of taking off from here in terms of generative science? What should us as founders be thinking in terms of the pace of innovation speeding up from here? Are you of the mind that it's just kind of at this exponential inflection point?
Yes, I think, like, depending upon certain categories, you know we like I'm just like every day blown by like the innovation which is happening, especially in the area of biology and chemistry. I think like we have a company called Inductive Bio, which is able to kind of, yeah, they're targeted towards medicinal chemists, and medicinal chemists are always designing these kind of molecules for a particular target, and they are able to kind of predict what should be the structure of the chemical, and 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 based upon kind of certain properties you need to kind of achieve in the lab. So all of that has a training loop, where they then go synthesize, and then like the results come back, and that loop creates a training loop, which kind of helps you become better and better over time, right? Like so I think we are, and that kind of as an example, you can take it in different areas. Like, so that's medicinal chemists. It could be taken into kind of biology. It could be kind of taken into different realms of physics. So that's, I think we're just like so early on in its evolution. I'm just kind of, what a time to be alive is
Yeah, what a
is what
time
I
to be
can
alive.
say.
Well, let's start to dig into some of these questions, because some are big and some are very practical, and we want to just, there's a lot of people are trying to understand and make sense of where we are today, like, and hearing from the investors' point of view on what matters to you in this new world, what matters to you as a purpose-driven investor that's still looking to build world-changing companies at scale, etc. So let's just go in order here. Warren Marcus from Wink Therapeutics, are you there? And if you are, if you could come off mute and then introduce yourself and ask your question. Warren.
Hello. Good afternoon. Hi, Vishal. How you doing?
Doing well.
Good, good. So my name is Warren Marcus. I'm a co-founder and CEO of Wink Therapeutics, where we are developing novel RNA products for treatment of type 1 diabetes. What we believe will be actually a functional cure for type 1 diabetes. As a quick side note, I actually noticed that we almost overlapped in the RTP area. Looks like you went to NC State, and I I started at Duke the following year and for my PhD. So good to see another person from the triangle making it big out there. But I was wondering, because I was listening to a podcast yesterday, right when I was going to work out, I was listening to a podcast and they mentioned that this year so far, there have been almost as many deals, so pharma deals, as there was all of last year. So I believe there are 18 right now and 20 last year. And in terms of deal value, it's actually the amount is even more. And so clearly it looks like companies have started, moving on in terms of acquiring assets. But I'm wondering what your thoughts are in terms of VC and their investment in terms of like Series A or below. Are you seeing kind of the same uptick, about the same? Has it gone down? I'm just curious in your view, what has happened in terms of funding from VCs in the biotech space or pharmaceutical space?
So, at a highest level, I think in the kind of biotech space, in general, it has been more of a winter. Capital has not kind of flowing in. If you look at kind of just overall and kind of space, I think what is in the VC space, and for even obvious, we don't invest in we don't have the PhDs which you have, Warren. Like, I think so. We do not invest in actual kind of molecule based discovery or those kind of platforms. What we are more interested in, how can computational approaches be able to kind of understand and decode biology better, so that hey, one can kind of come up with more creative solutions, right? So that's kind of area which we play, and that is on fire right now. I just feel like there's a lot of money flowing in that world as we speak. And in fact, not only in the pharma world, but also in the healthcare world, because healthcare, 5 years ago, infrastructure-based investments or technology infrastructure-based investments were not that exciting. And thanks to companies like Abridge, and people have generalist funds right now are very, very, very excited about investing. In fact, we are now competing with a lot of generalist funds who are excited about investing in both healthcare and pharma space, and they may have never worked in that space. So it's just, but they're coming from a computational approaches to investing in that. So that's what I'm seeing right now in the space.
I see. Okay.
All right. Thank you, Warren. Corey Mitchell from Antravita, are you there? And if you are, if you could come off mute, introduce yourself, Corey.
Vishal, let me first say, I love you. Secondly,
I love you too, Corey.
All right, great. We're starting out well. So my name is Corey Mitchell. I'm the CEO of Antravita Inc. We are a precision nutrition company. So hopefully we can get you jazzed about computational approaches to solving nutrition, right? And at the right time, at the right point to optimize health. So, and just curious, we're still pre-seed, but you have this wonderful thesis, and I think you would be a perfect partner for us, because I love the sort of the purpose of business as social impact, or basically flourishing, human flourishing, planetary flourishing. And so that's part of our mission and our core, my core, as a co-founder. So, but I'm curious as to, when you look across your portfolio, when you think about your seed companies in particular, what criteria do you think you're really honing in on for your investment decisions in seed companies?
Yeah, I think, Corey, the basics of venture capital is ultimately at the seed level. I think it comes down to the team and the entrepreneur. The entrepreneur's kind of ability and past record to show that they can execute and ship really, really fast and understand the market really fast, but at the same time be able to kind of think about where the puck is headed and kind of align whatever they're doing today to kind of where the world is headed. And so that kind of critical, but also what is critical is their ability to kind of storytell around how do you solve a big problem, which can kind of reimagine an incumbent in a novel way. How do you recruit? How do you raise money? all those things are critical. And so that's what we look for. We look for an amazing co-founding team which has those kind of attributes. Either they have documented during start of this particular business or in their past lives, and they are working on something which is we feel is worth pursuing, which can kind of change markets.
Thank you, Corey and Vishal. Digging into that, how do you, from the investor mindset, square the purpose with kind of how you're looking at the business? Oftentimes they're separated. There's philanthropy or venture philanthropy, and then there's this frame that you guys are doing at Obvious, which is starting with mission, but also building these extraordinary kind of businesses unto themselves. How do you think about that? And then what can these early stage companies do to set themselves apart or pique the interest of investor like yours that really to stand out?
Yeah, so Unity, I don't view ourselves as a social impact investor, first of all, right? Like just like in the classical sense, or philanthropic investors, or like that's not how we think about it. And I early on learned that in my mind there's no conflict between purpose and building an amazing huge business, right? Like so all our companies which we invest in, we look for where the scale of purpose and scale of revenue is all in alignment. So for example, I think if we are able to build more diamonds and not mine, revenue grows, impact grows. If we are able to reverse type 2 diabetes for more folks, I think we create more revenue. If we are able to kind of serve more SMBs, like at a company called Gusto, I think you are able to touch more SMBs. If you are able to kind of, we just sold a company in cybersecurity insurance. Like if you are able to keep companies safe through cybersecurity threats, the revenue grows and we keep companies safe. I think so. Everything should, like my son should be able to understand. It should not be complex, right? Like I think like that's how we make our investment. So there's no conflict between an amazing, inspiring purpose, revenue, and great recruitment and great storytelling. All of these things should align. Like our best companies are companies which, like gets us goosebumps and saying like, hey, I want to kind of work in this company because kind of the mission is so exciting.
I couldn't agree more. Our whole moonshot and health moonshot frame is specifically around that, and purpose can drive all those things, become a magnet, if you will, for business and for team building and for growth. Nandan Rao from Starlight, can you introduce yourself, please, and also share just what you're doing and then ask your question?
Yeah, of course. Nandan Rao, Starlight. We help patients do what the doctor told them to do. And I had a question. I know you mentioned the idea of moving healthcare from episodic to outcomes-based, from reactive to proactive, this kind of thing. And I was just curious, one can imagine that happening in many ways, right? One can imagine employers provide more and more point solutions, more and more services. They end up kind of like providers. You can imagine the world gets carved up into Kaiser Permanentes. You can imagine providers, primary care providers, take more and more risk. You can imagine Medicare takes the lead on this. Maybe Medicare disappears. Do you all take a position on what that looks like? Do you have a vision on what it looks like to say US, but maybe also international, if you think about that? What does it look like to have an outcomes-based system? And if so, what do you envision?
I think I can only talk about US at this point because we are mostly investing in the US. And in the US, in the healthcare system, I think what we have taken a stand on is alignment is a huge issue in the US healthcare system. And we believe that the provider kind of element provides alignment. So if you are able to generate clinical excellence and you are also able to take risk, then you have alignment, and then you are able to do the right thing. So most of our healthcare services companies we have invested in have with that mindset. All the things which you've just talked about, whether it's taking care of seniors well through a provider system, whether it's a vertical disease specific thing in, say, a type 2 diabetes, whether it's like a PCP based risk based models. I think we just get excited about, like, clinicians don't think about risk, right? Like that's not what they're trained on. But I think good things happen when two very opposite things come together. And that's the belief around which we've been investing for last 11 years.
Thank you, Nandan. Okay.
Thank
Just digging through the questions here. Looks like I missed someone. I'm sorry. Darlene Whaley from Next Life Sciences. If you're there, if you could come off mute and introduce yourself and ask your question.
I am here. Thank you. It's a pleasure to meet you, Vishal.
Same.
It resonated with me when you talked about the planet. One of the things we think about at Next Life Sciences is the resources that this planet has, and they are not unlimited. There's a limited amount of resources. So our flagship product is Plan A, a male contraceptive, really aimed at addressing the overpopulation in many areas. Even in our country, as advanced as we are, we have a 50% incidence of unplanned pregnancies. What are your thoughts on that?
I think from a technology kind of point of view, like one of the areas which we are focusing on, I'll talk about not specific your business at a system level. I think what we are mostly interested in investing around abundance, and it comes from a value set that it's very hard for us to kind of tell people from different parts of the world that, like, I think they can't consume when we are consuming. So how do we create a system through innovation and technology, an era of abundance? And abundance could come through multiple ways. So one could be abundance of energy, I think, and that is possible. There's enough innovation which is there, like whether it's clean energy or nuclear energy, that could be an abundance in energy, solar and kind of different kind of areas. And then kind of second area of interest for us is of abundance is in from going from an oil-based kind of system to a biology-based system of biomaterials. That could create also abundance. And then third is robotics and manufacturing as a way to kind of automate things, as a way to kind of create abundance and reduce cost and price. So that's the thesis which we've been focused on at Obvious.
Thank you.
Thank you, Darlene. I'm trying to get through as many questions. We got some good questions here. David Franklin, I think you're up next from Navide Health. If you could come off mute, introduce yourself and Navide.
Yeah, thank you very much, Unity, and thank you, Vishal, for this time today. So at Navide, we're building an AI-guided care plan that interacts with the real-world data that produces consumer health records in exchange back to clinicians, for example. And we start in menopause and women's health specifically. My question here is, what is the appetite of an investor to engage in startups based off the potential influence of political commentary relative to the investment space or industry swings or themes? So, for example, health may focus on women's health this year, so this may be more of an appetite for you to look into women's health, whereas next year they may focus on diabetes, or the previous year, so you looked at diabetes. Or if you take into consideration our current political environment relative to women's health, so maybe your appetite's not to look at women's health, right? So how are you influenced as a VC for your appetite to invest based off industry commentary and political commentary versus where we're at as a startup trying to be disruptive in the same space?
Yeah, David, that's a great question, because the beauty of venture capital is, I think I'm not investing for the next quarter or the next political issue. I'm investing for the next 5, 10, 15, 20 years. And what, from a first principle, I'm interested in is, I think we have a $4 trillion spend. We do not have great outcomes compared to kind of other nations, similar nations. In pharma, our cost of bringing new drugs has been going up exponentially, which is kind of inverse of Moore's law. And And those are kind of big, huge problems. And we are not getting younger. It's an aging population. And everybody's talking about budget deficits and things like that. I think and healthcare is a huge challenge if you think about for next 5, 10, 15, 20 years. So as investors, we are thinking about how do we tackle these kind of huge issues through innovative business models, right? Like I think, yeah, so that's how we think here at Obvious is like, hey, what should the healthcare system look like in next 5, 10, 15 years?
Into the future. Thank you. Thank you, David. Alexandra Greenhill, Dr. Greenhill, how are you from Care Team?
Thank you, Unity. And great conversation. My question is exactly on the future. I'm a physician, founder of Care Team. And in a world that's building siloed solutions, we're looking at the average patient has 5 to 7 diagnoses. And how do you actually combine all of these different care plans and instructions into a 24-hour period? A lot of it was inspired by the Third Wave book that I read by Steve Case. I saw that you've worked with him. And I'd just be curious if any of that thinking has informed your own thesis in terms of investment. How has it evolved? That ability of digital to transform traditional sectors like healthcare, but also on a practical level, like how do we actually get in front of your team? Do you invest outside of the US? So a high level question and then a very practical question.
Yeah, I think so. Let me answer the second question. Like 95% of our investments are in the US. And if we go outside, it has to be, and mostly it's where we have gone outside, it's been in Europe. And it's only in areas which we have a unique area of strength because we don't understand French healthcare system, for example, right? Like I think, and if we are winning a deal there, so then something must be wrong, for us to kind of invest in France. So I think yeah. So hopefully that answers your question. Mostly a US firm. In terms of clinical care and kind of integrated care, like I'm very, very bullish on AI and where we are headed. I think standard of care is going to get democratized in hands of all doctors and patients, right? Like I think, and then we're entering that era where docs don't have to, you'll have like a certain standard of quality which will always be available at the tip, and that is going to kind of uplift the whole system is what our belief is. So that's kind of an area which we're very, very excited of investing in.
Thank you, Alexandra. Nice to see you. Vishal, I'm curious because you did invest, in India. You were there. Anything you learned during that experience that you've now brought forward to what you're doing here? One example that I've always been inspired that I've seen in India specifically is around business models and bringing things, more transparent pricing to consumers, those types of things. I'm just curious, given you're now mainly US focused, if there's things you learned there that you then brought forward.
Yeah, I think one of the areas which India and emerging markets in general, I think is kind of interesting, is opposite to the US system because insurance never existed. It was kind of all cash pay healthcare. So it's like almost like a consumer business versus an insurance driven business, right? Like is how it operates by and large, although it's changing and insurance is becoming much more kind of a tool. And what that has resulted in, I think there's been a lot of innovation of business model innovation and verticalization of healthcare services. And through that, you've been able to kind of almost productionize cardiology or eye care or all these kind of areas. And the way we have done here in the US in consumer businesses, I think these specialties and scale has resulted in kind of really high quality care, but also kind of very attractive prices because of that, right? Like I think because you've kind of created standardization. And something which is interesting, maybe our healthcare system can learn here, because in our healthcare system, like they're seeing PCPs and also kind of doing heart transplant all under one roof, which is that's a different topic to be discussed different day, right? Because our systems are kind of designed very differently here in the US.
Totally. Thank you. Try to get as many questions in. Jeff Glick from Salvo Health. Hi, Jeff.
Hi, Vishal. Nice to see you again. And so I had a question. There's some side chat here, but obviously, Verda had announced, and I'm a big fan of Sami and Verda, as you know, but I'm making the assertion, and actually Oshi, like Salvo as a GI company, would agree. We really, when I talk to payers about value-based care, they are quite confused by how to do attribution across TME on chronic diseases, and obviously, Verda's come in and done employer direct deals. But how do you see, like, we've seen very little, we have a lot of success with the providers and delivering wraparound care. And so we're able to grow without value-based care, but that's the longer term vision. Is that, how do you see payers getting over this difficulty? Like, I've assigned my risk to the ACO or an Oak Street Health or whatever. I don't have room to also assign risk to a chronic GI and hepatology or obesity specialist vendor across full TME, right? As opposed to like a hip replacement bundle, which is just really fee for service, kind of with some pre and post visits. So I'm curious how you think this attribution problem will be solved, given that 70% of the dollars are not in primary care hands. And so you have like primary care incented and alignment, as you said, and yet 70% of the dollars are in the fee for service incentives that are completely different.
Yeah, no, I think you bring up, first of all, great to see you again, Jeff. Looking forward to chatting separately as well. I think you bring up a great kind of question. I think we are in early innings. I think, like, I envision, like, I think once either through PCP taking risk or payers becoming providers and kind of taking risk, I think once the rails get created, and there could be distinct way of taking risks for sub providers, like, that's a system I envision. But right now, it's just healthcare data and data kind of flow is not the best of class, if you think about it. And there's kind of a lot of work which still needs to be done. So what happens is, I think it's easy to be like, when we are investing, it's easier to kind of invest in companies which is a distinct risk you can take. A distinct risk could be like, hey, we have an investment in a company called Concerto Care, where we take home based, like, really sick dual population. Like, it's distinct, you can carve out, and then you can kind of do sub risk on something if you are that kind of a provider. I think it becomes harder in certain specialties, because what you end up doing is, like, if you're taking a risk in a certain specialty, then you also have to become a PCP for that too, right? Like, I think it just becomes trickier. So we look at, from an investment point of view, we look at, like, what are kind of distinct risk pools we can kind of take, which we can carve out. And then in future, we're kind of interested in building an infrastructure layer or data layer, like, where risk taking is understood much better across the system.
Thank you, Jeff. I love the gnome in your background, by the way. Michael Harris from Niche.
Great. Thank you very much. It's a very interesting conversation. My name is Michael Harris. I'm the co-founder and director of Niche. We are a program that goes into lived experience of young people living with type 1 diabetes who are the highest risk, highest cost, and highest needs people. And we help identify social factors that are driving their repeat hospitalizations as well as deterioration in health. We contract with Medicaid for these services. We've been around for about 14 years. So my question to you is, knowing that social factors drive health and health outcomes, any thoughts about how to get funding in the US healthcare system for products like ours that really focus on the social lives of people as opposed to the medical needs of people?
No, Michael, like, first of all, you've been doing this thing for 14 years, I'm assuming profitably, so kind of amazing job of doing what you're doing. And I think a lot of the research supports social determinants of health, and healthcare, kind of clinical care, needs to be kind of synergistic. And there are a lot of kind of programs all over the country which has been working on and validating. I mentioned a company called Concerto Care, which does home-based risk-taking for dual population. And one of the biggest instruments they use is SDOH as part of kind of managing that population. So I'm a huge believer of kind of SDOH as a way to kind of understand how to keep a certain population healthy over time. So yeah, and I'm hoping government can continue to kind of sponsor those kind of programs which have great efficacy.
Great.
Thank you, Michael.
Thank
This
you.
is actually a good bridge to Jonathan Fight. You had a question about investing in profitable companies. Are you there, Jonathan?
I'm here, but you just asked my question.
Well, you got to introduce yourself and you got to say
Gotcha.
who you are, and then ask your question, Jonathan.
Fair enough. Hi,
Nice to
Jonathan
see you.
Pike. Good to see you. Good to see everybody. My organization, Beyond Lucid Technologies, connects ambulances and fire services with their ecosystems of care, hospital, public health, etc. And that was the question. So we're hearing a lot of talk these days about organizations need to find a path to profitability. Once upon a time, being a profitable company was a strange place to be. So to the degree that some organizations have gotten there, have powered through to that. Some people call it bootstrapping. Some people call it something else, I guess, just kind of figuring it out. I'm curious where you guys are. And incidentally, it's just an interesting aside. I was just looking around on your website and notice you've got the different categories broken out by health: planetary health, human health, economic health. I enjoyed that because just this morning I actually gave a lecture on helping organizations find their own health to be able to sustain their health related programs that are looking at high risk patients who are indigent, et cetera, against social drivers of health, et cetera, and how they fund those sustainably. So the idea of making sure they are alive to see another day is certainly a topic a lot of people are trying to figure out. So some of us have figured out how to make a business out of that, and I would love to hear your thoughts. Thanks. Good to see everybody.
Yeah, Jonathan, I don't know, I took some business class a long time back, and it did say that the role of the business is to kind of make profit. And so although in Silicon Valley sometimes we do not think that way, mostly because I think we are just shooting for the moon, as Unity calls it, moonshot. And if a company is starting to kind of become profitable, we just say hey, think bigger, and we kind of put more money into it, and kind of become much more bigger. So, but ultimately, companies have to become profitable. That is what business is. I think ultimately you have to kind of meet a need where your cost is less than what you charge. So I think kudos to you if you become profitable. I think our business is venture, and venture for us is out of 30 companies we invest in, 2 or 3 or 4 companies have to become 5, 10, 15, 20 billion dollar valuation companies in public markets. That's the only way this model works. And so for us, we have to kind of shoot for that kind of outcomes.
Copy that. Is there, just to push on that then, is there any reason why you think, and I guess I'm revealing my own bias in this, but is there any reason why that can't be done with a cash flow positive business? Why would you have to be either growth oriented or large, or profitable, I should say? Why can't you essentially have unit economics that scale infinitely and have those big TAMs, those big markets, and also make money doing it? Why do you have to build negatively in order to grow?
Yeah, no, I think two clarifying questions here, clarifying comments. One, our businesses, we do want our entrepreneurs to kind of build unit economic positive businesses, not profitable, full on cash flow positive, but unit economic positive businesses which are growing fast. That is what we would ideally want all our entrepreneurs to kind of be building. I just want to clarify that. Number 2, there is an asset class called private equity, which only invests in companies which are profitable, and they hate losing money, and only invest in things which will never lose money. So I think that asset class also exists. I think our kind of asset class is a little different, which is you're trying to shoot for stars to kind of change markets.
But you're thinking in order to change markets, you need to be burning more cash than you generate?
Or you need to kind of swing for the fences of if you look at last NASDAQ, like last, or like the top companies, I think they've kind of all changed markets. It just requires like certain kind of an intensity. And there's a window opportunity which exists where you can kind of create a moat. And that's how our system works as a venture capitalist.
Excellent. John Tell, if you're still there, you had a question earlier.
I think she dropped, so we can go ahead.
Okay. So Alexandra Danzig, if you could, there you are, Alexandra. How are you? Could you introduce yourself, please, and ask your question?
Sure. Alexandra, co-founder and CEO at JetSweat. So background, we actually rebranded as Ritual. So we're a B2B digital wellness platform selling to employers and health plans with a much more integrated approach. And my question for you is around, so being a seed stage company, we have a lot of stuff in our pipeline, and we ended up, frankly, moving forward with much, much bigger health plans versus smaller ones or smaller employers sooner than we anticipated. And so stuff that we're like, not necessarily quite ready for, and we need capital to fund. So it's a bit of a chicken and egg situation in that regard. And so what I'm wondering is, as an investor, how can we package something up that shows everything that we're working on, the value of our deal pipeline, but actual proof points? Like, would it be helpful to have LOIs signed or anything like that before our deals are actually through? Because my fear, and what keeps me up at night is like, we still have to finish our SOC 2 compliance and, some certain things like that, which I think will ultimately block our deals once we get, pass through security and some things like that. So, and frankly, I don't really want to raise, do a full capital raise right now, but we do need some capital to take some stuff over the finish line. So have you seen any founder examples where, companies have really exciting things in the works, and they've been able to show you that, tangible proof of exactly the deals they're working on, where the conversations are, and what does that look like for you?
Yeah, so I think the way I look at is, kind of business building happens in kind of these steps. I think there is a pre-seed, seed, Series A, Series B. And the way kind of to simplify it is, I think kind of pre-seed, or I'll further simplify it. It's like pre-product market fit, like a company, which ultimately for us is about entrepreneur and a team. Early signs of product market fit, which to us is there's a customer, there's some validation of the solution, that there is an economic value. Then kind of full product market fit, which means 3 customers or 4 customers are or more are liking a particular product. And then growth of how do you kind of bring more customers. So whenever we're looking at a company, we are looking from each of this particular stage, how efficiently the entrepreneurs have managed their resources to kind of create outcomes. And then if we were going to kind of invest, how can it help them kind of get to the next level? And in conjunction with what I mentioned, we are also thinking a lot about, is this a venture scalable idea or not, right? Like, can it really change markets? Can it be a 10, 20, $30 billion company? Is kind of the second thing which we are thinking about.
Thank you, Alexandra. We've got just 1 minute left here. If anyone has the biggest insight or positive focus they'd like to share, please raise your hand or let Jen know. We got one minute left. I'd like to start. Vishal, thank you so much for sharing your wisdom, and also for how you're approaching venture at Obvious. I think I just wish there were more investors going big, thinking boldly, and also focused in kind of a purpose-driven way, but at scale, to build these extraordinary businesses. So, Alexandra Greenhill, you want to share your biggest insight or positive focus to bring us home here?
I really liked the clarity on the different stages that you just shared, and sort of the open perspective on what you do and what you don't do. But overall, in the midst of all of this negativity out there in the media, is your positive outlook of how exciting and innovation is today and going forward. So thank you for the inspiring words today.
No, thank you for all the entrepreneurs out there. Like if you look at last 100 years, like we've just we keep on solving huge problems, building a better world, and I'm a huge believer on humans and their power of thinking optimistically, positively, of building a better world. Like there's always in history there's ups and downs, but I think we're going to sustain. I think and build a better world. I think that's what gets me excited every morning. And all of us, entrepreneurs and investors, especially in venture. What a privilege, especially Unity, you and me. Like I think what a privilege to be doing what we are doing, to kind of work with all these optimistic people. So thank you for inviting me.
Thank you, and thanks to all the health transformers out there, and thanks for sharing your great questions. We'll see you all soon. Have a good day.
Thank you.
Bye-bye.
Bye.
Bye.
And finally, an invitation to all of the extraordinary health transformers, whether you are a startup, someone building the future of health, or whether you are an investor, funder, or buyer of the solutions out there in the marketplace. This is an invitation to you to join the Startup Health member community. Learn more at startuphealth.com. Look forward to hopefully seeing you soon.